Hi, everyone. Welcome to Canadian Mortgage Weekly, episode 76 for May 5th, 2022. Got Sam Thompson with us today, and we're really excited because today we're going to talk about the top 10 questions that investors are asking in 2022. So, Sam, let's just get right into it today, shall we?
Yeah, that sounds awesome. It's a great topic we got today.
Yeah, so let's look at number one here, guys, because I know that we always like to get into our information. So, the first question we're seeing that a lot of people are asking us is, how do I find an investment property these days with a good return on investment? And I don't know about you, Sam, but a lot of our investors always seem to contact us and ask us, what's happening with the numbers? How do the numbers look on this property, and get us to kind of evaluate it with them. And a mortgage is a big part of those numbers.
Yeah, exactly. There's a couple different, factors that would help, answer this question. It's a bit of a loaded question, right? Of how do you find one that has a great return on investment? I'm sure that, if we had the answers to these, we would be very popular if we could just tell people directly. But there is a number of factors that go into, making sure that it's a good fit.
You bet it is. Yeah. And one of those factors, is just how much that property will tend to appreciate in the future. And also the historical appreciation up until this point, that is a factor. And appreciation is a big factor on what investors look for on return on investment, as well as items like, say, the cash flow on that property after all expenses are paid, and if property management is part of it. And then you got that third component, which would be the mortgage pay down, which a lot of people don't actually consider as being part of the return on investment, but it is, because it actually factors into the bottom line numbers as that loan is paid down.
Yeah, of course. I find that a lot of people, whether they're home buyers or investors, the big factor is what's the home going to appreciate to, without thinking about the other side as well, that as they're paying that mortgage, they're growing their equity so that, when they do sell or when they want to cash out on that property, they have appreciated equity, but they also have existing equity that they're buying with each mortgage payment.
You bet. Yeah. So the second thing, let's just get right into that one, Sam, because there's a lot of items here. We got 10 questions. The second thing is, can I start investing in real estate without any money of my own? Which, can be, if we see that a lot of people advertise like buy an investment property with no money down. So how do these people do it? Because it is possible. And, Sam, what's your thoughts on that?
Yeah, of course. I think it is possible for sure if you already have an existing property. I find a lot of the ways that we can work it out so that, they don't have to put any upfront money in. It does come from leveraging another property, whether they're going to refinance for that down payment. I think we've run quite a few numbers, especially when rates were getting low earlier in last year, of refinances to buy a rental property so that they could take out that equity and use it towards the down payment. Those are probably the most common ones that I've seen for sure.
You bet. That's a big common one we do see at our office. So if you're interested in buying a rental property with no money down, stay tuned. Later in this month, with it being Property Investor Month, we'll be talking a little bit about that on a future episode of Canadian Mortgage Weekly. And number three will be, and this is one that we have been seeing a lot in the news, is that the change of the down payment and what's happening with that. And Sam, you and I have gone over this. We've released a video about some news that had been released earlier this year about minimum down payments changing from 20% down to 35% down on rental properties.
Yeah, I do think that it is going to cause a bit of a stir in the market. I think depending on, I'm not sure if I remember correctly when the start date is, but the closer we get to that start date, we might see people that were maybe on the fence or were working on getting their investment purchase in order. We might see a bit of speed or acceleration in their timeline to beat, that 35% required down payment.
You bet. Yeah, it could happen definitely in the market. So stay tuned. We'll see if this actually takes place, this rule change, and when it will. Number four is, how will I determine what to rent my property out for? This obviously is if you're buying a vacant rental property. Sometimes when you buy a rental property, Sam, it comes with tenants already, and they're already set amount. There's already an agreement in place, so you don't have to worry about that. But sometimes, you need to figure where the market sits. So what I like to recommend, as I'm sure you would as well, is websites like Rentboard, Kijiji, Facebook Marketplace. They seem to have a lot of rental units available, so you can see what amount of bedrooms and bathrooms your unit has, if it's a basement unit, an upstairs unit, or a side-by-side, however it works, and just match it and price match it that way. And then you can have also an idea of where your unit sits based on, I guess, the interior finishings, right, and the amenities that are available. I'm not sure if you can add to that, Sam. You probably have some things that you would probably look for in a rental property yourself, right?
Yeah, of course. I would say, it's exactly right. Likely from, Kijiji and Facebook Marketplace, just finding comparables. And again, factoring in those amenities of, if that can help you to charge for more, just to get an accurate price point. But just have a look around at what your local market looks like. I don't know if you're very rural, if you're going to be able to get what Toronto's currently charging for rent. So make sure that it's, in the area and the rental unit looks similar to the one you're looking at as well.
Yeah. And, if you're looking at getting that done yourself, this is the way to do it. But one way I was just thinking, Sam, if someone didn't want to determine the value for the rental property and want to outsource that, they could talk to almost a real estate agent or a property management company and hire that person to help with that information as well.
That's true.
Just thinking there. And number 5, how do I find the right tenant for the property? The same thing, Rentboard, Facebook Marketplace, Kijiji, using a property manager. You could use a property manager or a real estate agent. They are very well-trained professionals to help you get a great tenant. They'll go through all the checks and balances to make sure that tenant will pass all your screening protocols. So those are some options to look for there. Now, who pays the utility bills? Number 6. Sam, you've seen it both ways, right?
Yeah, exactly. This is a interesting question, and it does depend on how the rental unit is set up. If there is a even split, or even if you're, purchasing even a duplex where there's separate meters, then that's an easy way to split it and have, the tenants actually pay it for themselves. But if it's something that's, a bit more splitting hairs, they're maybe sharing the meter, the sizing or breakdown, of the property isn't quite, easy, then maybe doing an all-inclusive and charging extra is an option to go for there.
Yeah, great points, Sam. Great points. Moving on, number 7. There's a lot of points here we have today, but yeah, they're all valid points. A lot of these questions we got asked by potential new investors that are looking at buying rental properties. So let's share this information. What to do if the tenant refuses to pay rent? Now, this is this should be question number 1 almost, but it is a tough situation to be in, because sometimes as a property owner, to the tenant, you're looked at, oh yeah, I don't have to pay this month. It's the landlord's going to be fine, but sometimes the landlord is not fine because they're heavily leveraged and they're not able to make their payment. So the tenant needs to have those checks and balances to make sure that they can figure that out. So number 1, I recommend an emergency fund for the landlord, so you have that cushion to land on if the tenant doesn't pay rent, and so you have some time to work out a solution without any stress, or at least less stress than otherwise would be.
Yeah.
Yeah. And then from there, obviously there's the landlord tenant board, which the landlord or property manager could apply to and then work things out that way. Or you can work out a agreement with your tenant if you have a relationship already set up in that sense. Or I guess the third way, and we talked about this earlier, Sam, would be, and something we've seen as well, other property owners do, is actually buy the tenant out. And that's a very specific scenario. And it's something that, if you Google, you could find out some examples of that. Yeah. But yeah, so those are some ways to work out that issue that does come up. Number 8. Is it the right time to buy now or should I wait? Now, that's a loaded question as
I was
well.
gonna say, here's loaded question number 2. I mean, of course, it would be awesome to be able to tell everybody all the time, this is the right time to buy. But I mean, I think, and you can comment on it as well, but the amount of listings that we have seen, or at least that I've seen, increase in this last while, indicates at least more opportunity, and we're seeing that sales are becoming slightly less competitive. There's a bit of not a softening in the market, but just a less aggressive market for buyers. And again, when we're getting into the national house price average, we'll chat a bit about that later in today's episode. But tracking where the house prices are going is also a factor in, is it the right time to buy now, as we are in a bit of a soft point, at least compared to last month. Yeah, I don't know if you have anything to add for that one, Joe.
No, that's really well worded there, Sam. I mean, we are in a soft point. It is less aggressive market. It's not a seller's market, as some people have called out. I know we've seen some articles, very sensational articles out there right now calling for doom and gloom across real estate. It has softened, but it is currently, the trend is most recently trending down. But when we compare also the spring market compared to every year prior, we've seen a lot of times when the spring market does happen, the market is inundated with listings, which does soften it just slightly.
Yeah.
Similar to what we're seeing now. And then we have that steady climb that we've seen in past years between the spring and the fall, where prices start to climb again. So I'm wondering if we'll see that this year. And this is just properties that are on sale right now. Right. And this is a great time to buy, actually, when we're having this like recalibration. Or it could be a sign of things to come further. It's hard to say. The fact is, it could be one or the other, right, Sam?
It's true, yeah.
Yeah, that's what I can add there to your already well articulated point, because the market is one of those things that is its own animal. I know that we've seen these patterns before, so it's going to be interesting to see what happens going forward now as we monitor the next few months here on Canadian Mortgage Weekly. So in terms of to answer if it's a good time to buy or should I wait, I mean, it depends if you're looking at long-term trend or a short-term trend, and what your market is. And I don't know, it's a really specific answer. I think you need to call us.
Yeah, it's good.
Yeah. And then we can set you up also with a local agent, and then we can get you set up and rolling with the advice coming from the local market that you're in. But yeah, other than that, it's a loaded question. Number 9, should we hire a professional property management company for our property? And I've had experience doing it both ways, and we were talking about this, Sam, and it all depends on how much, really comes down to how much extra time you have throughout your life. And sometimes that can be not too much of an extra added responsibility if you manage your property well and have systems in place to sort of make sure you're on top of things before they happen. But if you're in reaction mode as a landlord, it can get stressful, and sometimes it's better to, if you're in that way, then it's better to just outsource it to a property management company, because it can relieve a lot of stress for the homeowner. But the caveat is it does cut into profits. So if you're looking at that return on investment, it's a small little costing to calculate in there, but we can always recommend property management companies for any investor that's looking. So give us a call. Number 10, what do we need before getting into real estate investing? What do we need to know before getting into real estate investing? Well, Sam, I think what they need to know is to tune in to Canadian Mortgage Weekly this month for May 2022 as we get into property investors. And we're going to be covering off property investment related episodes every week here on Canadian Mortgage Weekly, as well as doing a few extra videos that we plan to release based on some of the articles that are coming out and some of the news that has been reported for investment properties. So stay tuned for that. And in the meantime, Sam, I know that you always come with the stats and data for us. So let's welcome Sam Thompson. He's got our data for us today. Let's get into the start of it here, Sam.
Yeah, of course. Well, we always covered the, the data and the metrics of what we're seeing on our end, which is also really important to have if you're looking at getting into real estate investing. So the first one that we cover off on our weekly episodes is the 5-year bond yield. So this is always a good indication of helping us to track where that 5-year fixed rate is going. If anybody has, tuned in previously or is, looking at the 5-year fixed rate on their own time, they probably have noticed that, we're far from the days of a fixed rate being mid 2%. We have been seeing the fixed rate rise, and it really does correlate with what we see on the graph here for the 5-year bond yield. Currently, the yield sitting at about 2.8%. Up from last week's, there was a bit of a dip. You can see there we dropped down to 2.64, but it has, reemerged at that 2.81% range. So again, indicating I don't know if we'll see any sort of softening or change in the fixed rate soon. It's a good time now to get in and pre-approved if you're looking at getting into a purchase before, we could see that that 5-year bond yield hit the high end. It's getting closer and closer to that 3% mark. So getting ahead of any future rate hikes is a good idea to get pre-approved now.
Yeah, we always recommend getting pre-approved. Definitely, Sam. It gets you a good start and start confidently in the market to make sure that you know what your numbers are going to be and just exactly what you can afford, so you can confidently move into an offer. But yeah, definitely still in that tightening range. It's going to be interesting to see where the fixed rates and bond yields go from here. Yeah, we'll have to keep posted here. Thanks for sharing that, Sam, on today. We'll have to keep posted. We're seeing that arc there, so we'll see if it continues to go, and we'll keep an eye on it. So what else we got here? We have the CDOR rate, and today it's sitting at 1.38%, and that's up from last week's 1.32%. Does that make the variable still a good option there, Sam? I know that the spread is getting thinner? I think we're seeing variable rates now creep up into the 3% range.
Yeah, definitely. Following the last couple of Bank of Canada interest rate announcements, we are seeing that the variable rate is creeping up higher, and there's no longer, quite a substantial gap. There is still a pretty decent gap between what the fixed and variable rate is now. But what we can use from the CDOR rate is looking at its variance from today's current prime rate, which is 3.2%. It'll give us an indication of if the variable is a good option. And currently it is still under a 2% variance. So that does indicate and show us that the variable is a good option, even tracking into what the Bank of Canada has announced, even though, we have heard speculation or some forecasting of some future rate hikes. Still, to reach what today's fixed rate is, we still have probably a long way to go to meet what today's fixed rates currently are.
We definitely do have a long way to go. It seems that that's a message that I'm trying to communicate to all our clients these days, because when we look at fixed rates currently, looking at the fixed rate right now for TD Bank, for example, one of the lenders we work with on a frequent basis, we're seeing rates 4.5% on a 5-year fixed. So the variable rate can be a very good bargain when you really look into it. Let's look at the Bank of Canada interest rate, because I know that it was hiked. We had that super-sized rate hike last time, the biggest hike in the last 20 years and a bit, 22 years, I think it is. But I'm thinking we're going to see another possible rate hike on June 1st. And that's concerning because we have a lot of people in variable products, but it's also not concerning because it's still going to be lower than the current fixed rate. So I'm happy about that, and still very confident the variable is a good option because it also provides flexibility with your life. If you do need to sell, it does provide a much lower penalty calculation on most mortgages, where it's 3 months interest rather than the interest rate differential, which could be thousands of dollars at times.
Yeah, it's true. That's a really good point. There's been, a number of scenarios where we've seen some fixed rate penalties being quite high, and that's just coming directly off of that equity that you've been gaining in the home, whereas a variable rate does offer you, a softer penalty. But yeah, I think we have been hearing some news, and there's a bit of an expectation for a further rate hike on June 1st. Currently, overnight rate is sitting at about 1%. And again, I think there have been calls of possibly another double rate hike on June 1st, which, would definitely be newsworthy. It would definitely be something that would perk up the ears of anybody in a variable interest rate. But again, I think we're still within 5 or 6 rate hikes from reaching the current fixed rate. So it'll be interesting to tune into, and you can check out the last rate announcement we did for the rate announcement in April, where we did also cover the monetary policy that was released by Bank of Canada. So that's always interesting to look at as well when we're talking about future, rate hikes. What's on Bank of Canada's mind, and what are the factors that are, being considered when they're setting their overnight rate?
Great point. Yeah, I really like the way you've conveyed that message across there, Sam, and definitely check out our last video on that monetary policy. We do get into detail about the Bank of Canada's decision as to why they did decide to raise the rates. It's really interesting to hear, and we'll be following that here on June 1st. Join us on Wednesday, June 1st for Sam and myself for our pre-rate show and our Bank of Canada live interest rate announcement. We're looking forward to it. Let's see how much our mortgage payment will change. And number 4, we got the next piece of news here, and this is the recent trending of the national house price.
Yeah, so as you can see, we're still working with March's data for probably the next week or so until the CREA releases, how we fared in April. But we did see in the last month that there was a drop in the national house price average, which I know, many prospective home buyers were probably happy to hear that. Even at a new average in March of $796,000, still does leave a household income needed of about $165,000 a year, with a down payment of at least $54,000. So maybe still slightly out of reach for some people, but at least it is trending in a direction that they can agree with. And it's going to be interesting to track as we again move further into the spring market here.
Absolutely, Sam. It is going to be interesting to track. We'll make sure we cover this data on Canadian Mortgage Weekly. But definitely it's something that I've been hearing a lot of questions about as I'm out and about chatting with people. They're asking me, Joe, what's happening with the market? And everyone is really looking to find out. And, it's something that I also think that we're seeing videos being posted about and articles being posted about. They're almost very sensational, but almost concerning at the same time. And that's, some of these articles that we're seeing, how home prices have dipped in certain markets by upwards of 20+%. And also that we're seeing, and that's all preliminary data. And also we're looking at this TikTok video that just came out that you and I just watched, Sam. I'm going to see if I can bring it up here real quick and try to share it with everyone. But essentially, the TikTok video is a real estate agent that originally went in February who posted a video saying that people are walking away from deposits, or that she thinks that would start. And now she's seeing that happen actually a little bit more. And I'm just
Wow.
trying to find that video here. I don't have an opportunity to share right now. Oh, there it is. Let's see here.
Back in early February, I made a TikTok about what to do when you get a big fat number for the house.
So I don't know if you can hear it.
And I talked about getting big fat deposits. The reason I gave was because if a buyer walks away,
I'm going to share this
it is
here.
less likely they'll walk away from a big fat deposit. And guess what's happening now? Prices have dropped from February and buyers are walking away or thinking about walking away because the loss of a small deposit is much greater than the loss that they're incurring on the purchase price that they paid in February. I have had conversations with multiple agents that are facing this situation right now, and they're holding small deposits of 5% or so. It's not a rumor. It is absolutely true. People are starting to walk away from their deals. So I'm wishing everybody luck out there because shit's about to get ugly.
Okay, so we have that video there, and my computer is just taking a moment here to recalibrate as I stop this share. And were you able to see that?
Yeah, we saw the first half of it.
Okay, good. So I'm
the
glad you
audio
saw
for
the
the
first
rest.
half. Yeah, perfect. Yeah, there was some video issues there for the last part, but it is concerning. This is a Toronto realtor. She's an experienced realtor, and that just came out there 17 hours ago. So it's some news to look at, and because of that, that's why I'm thinking that it could be a good time to buy, because it could be an indicator that properties are on sale right now compared to what they were a few months ago.
Right.
But at the same time, make sure you talk to your local agent or talk to us about your specific market, because it is also concerning to see that. And we want to make sure that you're getting in at the right price point into the right house as well, because there's a very wide range of prices for the same type of home these days, considering the prices have been so up and down.
Right.
Yeah. Anyhow, thanks for sharing that, Sam, and appreciate all you viewers who watch Canadian Mortgage Weekly. This is episode 76. Sam and I have been doing this for 76 episodes. Sam, he is a mortgage agent out of Barrie, Ontario, originally moved from Ottawa, Ontario, and lives with his wife, Grace, and his pup there. And I know that your pup had some visit there with the vet there, so I'm glad to hear that doing well, and it's great having you on the episode here, Sam. Always great to have your input, and thanks for joining us today.
Yeah, thanks so much for having me on today's episode. It was a great topic to chat about, all of those preliminary investor questions, and definitely stick with us the rest of the month as we cover, some of these topics in a bit more detail. And again, thanks so much, Joe, for joining us on today's episode, for hosting. You have, over 11 years in the industry, so definitely very knowledgeable about the mortgage market. So thank you again for having me and sharing your insight in the world of real estate investment.
Yeah, for sure. Thank you very much, Sam, for that introduction as well. So as you guys watch, make sure to follow, like, comment, and share our videos. Feel free to leave a comment below or send us a private message about what videos you would like to see, what questions you would like us to ask. But next week, Sam and I will be going over 9 tips to get started in investing in rental properties, continuing on in our property investor series. And Sam, we're going to get right into some of the nitty gritty about what we need to get started, what you need to have in place. So join us next week. And we'll see you then for episode 78.